Welcome back, everybody, to the newest episode of the PenPodcast.com. I'm your host, Matthew Harms, founder of Pen for Hire, where we offer premier ghostwriting and author coaching services, and the Pen Podcast, where we sit with authors, writers, writing industry professionals, subject matter experts, and all around interesting people. And today I have the pleasure of being joined by someone who fits all of those categories, Mr. Todd Leddon. How are you today, Todd?
I'm doing good. How about you, Matt?
I am fantastic. Thank you very much. I appreciate you taking the time to be here.
Yeah, thanks for having me.
It's my pleasure. Um, for full disclosure, as I always do in every episode, Todd and I do know each other, so I'm not gonna say anything that I know without Todd saying it, which is why I'm not even gonna introduce him and steal his thunder. So, Todd, if you'd be so kind, tell everyone a little bit about who you are, your background, and why you decided to write a book.
I'm in the mortgage industry. I've been in the mortgage industry since 2001. So I I took the journey in the mortgage industry on kind of the back end, where the money finds the mortgages, which eventually get to the loan officers, eventually get to the borrowers. And uh so one of the reasons that I actually decided to create the book is I felt like it was a little bit of a Wizard of the Oz kind of experience, like who's behind the curtain that's providing us with all this funding in capital markets. And, throughout my career, I've noticed that obviously our part of the business is pretty integral in the success of home ownership and being able to provide funding to borrowers. And it can get a little confusing if you're in a different area, if you're a real estate agent, or if you're a loan officer and you're trying to get folks into these loans. You might not know like what's behind the scenes. But what's behind the scenes does affect the whole chain, right? All the way up to the borrower. You know, Fannie Mae changes, Freddie Mac changes, Ginnie Mae changes, program changes, market changes, all that stuff in the capital markets is that's where the money comes from. And the ingredients of the mortgage that eventually the borrower gets is the ingredients is the borrower and their credit worthiness and the collateral, right? But that those are the components and the ingredients of the product that gets transferred and money gets shifted over for those at the right deals. So I wrote the book because I found um, there wasn't really a handbook out there to really understand the whole mechanics, and it's really a discipline. It's not like Wall Street where you're you know a trader and you're making big old huge trades out for a hedge firm. It's not really like that. It's more like let's make sure that we package uh, loans that are sellable and that an investor is interested in based on the parameters that they're after with their money. So I also wanted to help other capital markets executives, right? So because I know I'm not the only one that's getting questioned. Well, why is this happening? And why are you doing this? And why are margins X? Why is pricing occurring this way? What are we going to do about this? What are we going to do about that? I felt like this would be a great handbook for other capital markets folks to actually educate in their companies, their independent mortgage banks that they might work for. Or, any type of mortgage bank. It could be a credit union. It could be a small regional bank. I just think it was a great way for it is also for me to get some exposure too, right? To be able to say, hey, this is this is kind of how my career has gone. In the day of social media, it's good to have a brand. And it's also good for me to be able to differentiate with the company that I work for, um, to have, a handbook out there that we could promote and grow our business. But at the end of the day, my main motivation was education. I was about, hey, this is how I see it. look, you might do it differently, but you're going to get something out of it, right? Because the topics are so uh, complete that I really tried to focus and give all the best practices with each chapter. So hopefully some of that makes sense.
So you said something, and I know, a lot of my listeners and my clients know that I kind of dabble in real estate and finance. So I like to believe I'm a little smarter than the average bear when it comes to some of these things. But you had mentioned earlier, like the Wizard of Oz and peeling back that curtain. So tell us a little bit more about how much really goes on behind the scenes. Because I think, no, forget think, I know 99% of people out there think that you go to the bank for a mortgage and they write you the check and you buy your home and then you pay the bank back. But that's not how it works at all, is it, Todd?
No, not at all. There's a whole market out there of folks that have money that they want to invest. And um, they like the guarantee behind, like, for example, a Fannie Mae or Freddie Mac insured mortgage. And so, and also Ginnie Mae, there's insurance there. And then there's other types of structures that don't have any kind of guarantee. So there's different flavors behind there, um, behind the Wizard of Oz. There's different buttons to pick, right? There's different potions. Um, and participants come in and out, right? So it's a very dynamic market on the back end. And most likely your loan's going to get originated by a loan officer, and then the company that they're working for, they may or may not maintain that mortgage. They have the potential of selling it to another investor who wants to receive the MSR value that, there's in the market. I don't know if you have experienced this, they'll sell your mortgage off and then they'll service it. They'll collect the payments and the interest, and then they'll funnel that money back to the main investor. And that money ends up in a bond, and a bond gets traded on the market. So lots of times you think that, you go to your local bank and you're like, yeah, they gave me money and I'm paying them the whole full time. Little do you know that part of your money is actually going to an investor that's outside of the bank. So there's just a whole big market out there, and how you can sell whole loan, you can sell portions of loans, and a lot of that stuff I describe in the book, where there's different types of executions. And so I try to, in the book, get folks to see and open their eyes to, oh, this is pretty complex. There's a lot more to this. And the more complex it is, the better it is for the consumer, because there's more options for money being funneled back to the borrower, the homeowner. So it's good that it's complex, but it's also not known to the borrowers.
Yeah, one of the questions I was going to ask you, or at least, I mean, I know the answer, but just for certain people out there who may not, is that complexity. It's not as simple as, because you used the word discipline earlier, and that's so key, right? I think people just think, oh, the banks always make their money, right? I'm paying them all of this money in interest every month, but do the banks always make money on every loan, or is there a margin for error where they can lose money?
There's definitely a margin for error. Anytime you're creating something, right, and then you manufacture it and then you sell it out to another market, which is exactly what a mortgage is, there is room for error of, hey, did I price this out right? Is this actually the product that I wanted to put together? Is it being paid right in full? Like, there's so many things that can go wrong with margin. Um, and that's, there's even different markets for loan programs that go bad, like that are not, they haven't been put together the way they're supposed to. They go into like a potential scratch and dent market, right? So Um, there's tons of risk, and it's really important to get the data right. It's really important to get the pricing right. It's really important to hedge your pipeline accurately, price it accurately. So it's quite a process. A lot of use of software, third-party services. So I explain a lot about that and what you want to look for in third-party services. And then you're audited too, right? Uh, on whether you did things right. So whether you do things right or not is going to have a financial consequence. But then even to play in the business, you get audited to make sure you can play in the business, right? So um, that's even another level of complexity. And then, you have the government wanting to make sure if there's fair lending practices. That's a component. You don't want to mess up on that. So um, definitely room for financial, reputational risk, um, you know, cash liquid reserves risk, all sorts of good stuff.
I will personally say for anyone out there who's ever gone through a mortgage process and cursed the entire time saying, "Why do you need all this stuff? This is ridiculous." Everything you just said is the reason that the process is so cumbersome for a consumer, correct?
Right. It is. If it was, I mean, we're talking big money, right? If it was just like selling toothpicks, just make sure the toothpick is wood and it's shaped right, right? Um, and then it's in a plastic baggie, right? So it's clean once you use it. This is totally different. It's like you have people who have given you money and they want a particular product that they can sell potentially if they had to, right? The goal is they buy the product, they lend their money, and then they get their money back, plus they get a return. But they also know there's a potential for them to want to get out of it. And that's why the mortgage market is so liquid because it is so detailed, right? Um, if it was just like the Wild Wild West, you wouldn't have the same amount of liquidity, and then it wouldn't be as complicated.
I mean, that's another great point that just the word you used, I don't think most people associate a mortgage with liquidity because that borrower is in that loan for 30 years. But from everything you've said, there's all these back end things going on where just because their loan is the same for 30 years doesn't mean anything else behind the screen is the same.
Right, that could have changed hand 50 times, that 30-year mortgage, right? So in order to create that liquidity, we're talking long-term structure of finance with a mortgage. So it's not like the life cycle of a mortgage is a very long life cycle, and that's part of that complexity.
So this may or may not be relevant, but I love that you use the term scratch and dent. And for me, it's thinking like, wow, these huge institutional investors are can be very similar to a retail consumer who goes to Best Buy and gets the discount on the washing machine that's out of the box.
Yeah, that's exactly the case, right? Like that dishwasher that's been touched already and distorted has less value than one that hasn't, and that's packaged in a box. Same thing goes with mortgages. If the goal is to ship a perfect mortgage to the market and have there be no packaging issues or no problems with the product, and if there is, like an example of a scratch and dent issue, it might be like, okay, this appraisal is totally wrong, or this borrower is already defaulting on it, right? Then there is a market out there that there's a little bucket where this is messed up, but there still is some value in it. If you're interested for a discounted price,
Still
you,
washes dishes, just doesn't look
yes,
pretty while it's doing it.
yeah, yeah, it still gets it done. Um, or maybe it gets half the dishes done, not all of the dishes. There's still a value there. So, uh, I think you'd probably have that in lots of markets.
Well, absolutely. And I think something you said before, maybe it's gotten I think people hear where you said MSBs, mortgage-backed securities, everyone's mind immediately thinks back to the financial crisis and right,
Yeah.
everything that went
That was
wrong.
almost like a fundamental, I don't know what you'd call that, sale on goods that are bad, right? Like it was like
A universal cluster.
multiple shops had, open business for sales on products that had just went bad. Like shipments of containers from China came and they were damaged or something for multiple companies. That's what happened in the crisis.
That
Like
is such a great way of explaining it. And no one let you know up front that those containers were damaged.
no, they were assumed to be perfect, and then the collateral behind the mortgages declined, and the payments were not occurring by borrowers, and they were hidden in weird packages, right? It looked like they were perfect packages, but they weren't. And so that's what created Dodd-Frank and all this other good stuff for compliance. So that added a whole nother layer of complexity in our industry um, in 2008. So
I appreciate that clarification. I want to switch gears for a minute because in the entire time we worked together, I never thought to ask this question. And now that you specifically said, part of the reason for writing this book was to help other people who do what you do, why would you write a book to help your competition?
um, I wrote a book to help our competition because I don't necessarily view the people doing the same discipline as competition. I view them as folks doing the same thing in the same industry, wanting to make the same decisions and get accurate. I feel like we can beat other folks by doing it faster, better, stronger, right? But the gist of it to me is the relationships with other folks. It's nice. Like whenever 2020 hit and there was issues with big margin calls that occurred, having those other capital markets folks be willing to talk to you about their situations help me, right? I'm part of that community. So, um, it's like all things in, you know, NBA players or, you know, they know each other on the teams. They're competing against each other. Doesn't mean that they don't have alliances and probably don't talk strategy about their, maybe you're a pitcher, right? And you're talking to another pitcher, right? But when it comes to game time, right? Game time to me isn't necessarily research time. Um, my goal is to execute better.
That's a great analogy because your teammate today may be your competition tomorrow, and your competition today may be your team
Yeah.
tomorrow.
And at the end of the day, you want the whole
The
Major
whole
League Baseball Association
to do well.
to do well, right? And so for me, I want other capital market schmoes to do well. It makes it so we can still provide this service to borrowers. It makes it so fans still show up at the games.
I love that answer. I mean, just the altruistic mindset behind it. You had mentioned earlier brands. So what has this book done for your brand now that your peers, people in the industry who struggle day in and day out with what you do, seeing that you wrote a book that adds value to their life?
Yeah, it's been great because um, lots of times the guy in behind the curtain is assumed to be doing kind of like shady stuff, right? Um, and that's just not the case. I'm on the same team as the guy that's trying to help Joe Schmo borrower. Same exact team. I want him to succeed. Um, so what it has done for the Leader One brand is brought hey, we're willing to show some transparency out there with capital markets discipline. In fact, we have a guy who wrote a book on it that's actually on the top whenever you go search Amazon, right? So whenever you're transparent, it's for your brand, it lets you know if you're a loan officer wanting to work for Leader One, or if you're wanting to get a mortgage, it's there's just more to understand from that particular company in the mortgage market based on the transparency of how they're executing from the capital markets perspective. So it's no secrets. Obviously, everything is not shown, right? But um, the the majority of how it's done, it's like we're providing this service of education back to any clients or any potential employees that join our team. So that's been great to be able to just talk about it.
I love it. One of the last questions I have for you before you can tell people the name of the book and where to go find it is the process of writing the book, because you wrote this book entirely yourself, right? So it's a complex topic, it's a complex market. How how did it feel for you getting a lifetime's worth of this industry knowledge out of your head and putting it in a book?
Oh man, it was extremely overwhelming, right? To be able to think about how do I explain each piece. I think though the key was to not look at you're writing a book. The key was is I need to spend an hour today on this chapter with this paragraph and this concept. And then it's no different than brushing your teeth, right? The next day you're going to brush your teeth. So the, it for me it almost felt like going to the gym. It was just something that I had to do to finally get a result at the end of the day. Um, but what was great about working with you is the fact that you kind of had a little bit of an understanding of the industry, and you could tell me, hey, this isn't totally making sense. Um, how can you adjust that? So for me, it was fantastic having a guy like you behind me. I don't think I would have written a book if I didn't have some sort of nudge behind me. You didn't have to motivate me,
No.
but you did steer me, which motivated me to want to satisfy you as a reader because you're a live reader behind me, right? And so I was like, I wanted you to understand. I had the concept of it being you being behind me, a real person that I'm gonna have to talk to afterwards, right? Versus if you were isolated in Alaska in a cabin writing a book with a candle, right? And then you just sent it off to Amazon, it you wouldn't get any feedback, and you would it would just be scary. Like having that feedback coming back from you was key to keeping me motivated to write good quality stuff.
I love that answer because I tell everybody, whether you're writing a book on your own, with a coach, with another coach, uh, sometimes the worst thing you can be is the biggest expert there is on something because you're so close to it, you don't realize that the reader doesn't understand what you know so well, and you've just got to break it down a little bit further. And that was one of the most enjoyable parts. Was I love what I do because I get to learn from experts like you. I walked away from this project now knowing more than I ever knew about the mortgage industry, and I had a license at one point, and I feel like I only scratched the surface of knowledge. So for anyone out there who knows nothing about mortgage, I mean, this book is going to be completely eye-opening. And the next time they go to their bank or their broker for a loan, hopefully they're going to be a little kinder and not say, "You mean I really need to give you all this?" Yes, you need to give
Yeah,
me.
a lot of work to get all that stuff. And then they're like, "Oh, cool. Can I have 3 months of that? Can I, like you're like, dude, I just gave you 1 month. It was so hard to even get that, right? Like,
By the time
definitely.
they get you the third month, it's now the fourth month, and it's like, I hate to break it to you, that first month's no good anymore.
Yeah, right. And it's because we have a whole market on the back end that wants to make sure this is really legitimate. And so,
Yeah, this isn't the good old days of the mafia loans where you only need Vinny Bag of Donuts to say it's okay.
yeah, yep, totally not like that. Everybody's watching, especially after the financial crisis.
Absolutely. Todd, with that said, please tell everyone a little bit about title of the book for sure, where they can find it. If anyone wanted to contact you, anyone in the industry, or anyone that just wants to, expand their knowledge or get you to come in and help train their teams, where can people find out more about you?
Yeah, so the name of the book is called Protect the House. Um, and it's a comprehensive mortgage capital market strategy guide, and it's sold on Amazon. So you can find the book on Amazon. If you just type Protect the House, capital markets, mortgage, or something, it will come up. And then, professionally, you can find me on LinkedIn under Todd Leddon. It's just my name. So, yeah, I don't have much of a Twitter following or any of that good stuff. I would say LinkedIn is where I do most of my business communication.
Hey, Twitter and those other ones will only get you in trouble these days.
Yes.
I am fully with you. We're going to post the link to the book at in the bottom of the show notes. We'll also make sure that your contact information is there. So for everyone listening at home, as always, we appreciate you tuning in. We appreciate you supporting our guests. If there was anything that wasn't answered, or if you somehow can't find Todd, reach out to me, Matt at penforhirnyc.com, or just drop a note on the show and we'll make sure we get you pointed in the right direction. You just spent this time listening to the Penn podcast with Todd Leddon from Leader One. And we will catch you all in the next episode. Todd, thank you again so much for being here to talk about the book.
Thank you, Matt. It was good times.
It was my pleasure. We'll talk to you soon.